Hello everyone. All right, let's get to it. Today we'll be looking at case study 3. All right, and the pair we'll be looking at is under cryptocurrency is called ADAUSD. All right, and like we usually do, we start from the monthly time frame, then the weekly, then we'll take our trade on the daily. So let us go. Now you will notice that in this particular case study, I didn't specify if we are going to be using strategy 1 or we are going to be using strategy 2. In the first case study and the second case study, you can see that strategy 1 and 2 work in hand together, meaning that strategy 1 is all about reversal, yes, while strategy 2 is all about continuation or confirmation. All right, so I just want us to get used to that particular analogy. Then before we go there, you will notice something also, that in all of this trade, our signal for entry is all about looking for candlestick formation, whereby this is the first candlestick, the second candlestick, and then the third candlestick. So whenever we see this type of formation where the first candlestick is now taken out by the second candlestick, then the eye of the second candlestick has been taken out by candlestick 3, and then the law of candlestick theory is just kind of within this range. Okay, so with this we can now consider the middle candlestick, which is candlestick 2, as kind of our demand zone or supply zone. I've explained all this in the videos on my channel. Now looking at this chart, when you look at it, we are going to be starting from the current, that's looking to the right. We are going to be looking to the right. Everything that is happening here is on the left, has already happened. So zooming in very well, that's where on the monthly now, you can see that on this particular situation, this is candlestick 1 taken out by the eye of candlestick 2. Now this is candlestick 3, candlestick 2, candlestick 3. But we can see that although candlestick 3 week did not go above candlestick with 2, but the body did not go below the low of candlestick 2. Because of this, we cannot consider this as a valid kind of our candlestick formation. So let's continue. Also, we can see on this side, so candlestick 1, 2, and 3. We can see that candlestick 2 took out the eye of candlestick 1. Then candlestick 2 is here. Then the candlestick 3 is also here, giving it a yes, with here is valid, here is valid, here is valid. But the problem is candlestick 3 week did not go below the week of candlestick 1, or they went below the low of candlestick 2, but we want it to go below the low of candlestick 1 and 2. As such, we cannot consider this as a valid pullback. Now let's look at what happened here. If we zoom it very closely, what happened here is this: candlestick 1, 2 have been taken out by candlestick 1, candlestick 2, 3. You can see candlestick 3 took out the low of candlestick 2, and by zooming in very well, it also took out the low of candlestick 1. Okay, if you zoom in very well, you can see it. Let me mark it out. To me, that's what I call month liquidity sweep. So let's run a bar replay. So therefore, with this type of formation, we cannot say that this is a monthly high, and then this is going to be a month low. So to be able to have a proper playback time, how we remove this particular weak candlestick, and then let's go to the corresponding weekly time frame and see how this is going to play out. So let's play it. So we want price to come and take out this low point on the weekly and give us our kind of candlestick formation, whereby we have the number 1 taken out by number 2, then number 3 taken out the high and of 1 and 2. So but since that is not happening here, let's see what happened. So usually what I will usually do is this: on the weekly time frame, this whole setting here is a weekly structure of itself. So therefore, this low point can be considered as a weekly low, meaning that if I replay back this particular candlestick, okay, before price get to that weekly low, and I go to the daily time frame, let me see if I'm going to see a kind of candlestick formation. Okay, you can see that. Let me see. Yes, this is what I'm talking about. When I zoom it in, I hope you can see it very well, that on the weekly time frame now, using this as a weekly low, and then coming back to the daily, our candlestick formation has already formed. You can see the second candlestick has taken out the low of the first candlestick 1, and this is candlestick 2, candlestick 3. The high has been taken out. Okay, now I can now place my trade on this particular candlestick formation. That's my daily demand zone, and then I can buy. And my target is usually 1 to 3. Okay, my target is usually 1 to 3. But in this scenario, if you can be patient and take it, you can have, this 1 to 5 trade. Let's see how it plays. Price came in, target, and then the trade play out very beautifully. Let's see how it plays out on the daily time frame. Now, while that play out peacefully, having a 1 to 5, you will also notice something here. Let me remove it. Now, on the first confirmation, we usually do that. Okay, when price has tagged into this demand zone, what are we expecting is that yes, this is our valid order block, a confirmation type of trading, that we can enter this trade. This is our order day demand zone 2. But for us to have a valid, this one, we can enter this particular trade also. We can enter it here. Let me see. Because this demand zone, this is a continuation trade. So meaning that we have trade 1. All right. Trade 1 is this at the demand zone. Trade 2 is this. But that will work. Then if this doesn't work, the most important is when we now have this daily high point taken out by this, and then it will now come down to tap on this confirmed order, confirmed demand zone as our kind of continuation trade. So let's see what plays out. You can now see what happened here. The trading of a thing is not 100%. That is what I want to show you guys. You see, or another type of trade that we take, if this had happened, it will be a fine trade. But you can see that this fade, that's because this strategy is not 100% waterproof or airtight. But what can we also do here? And this is a daily time frame type of trading. You don't have to be in a hurry. Each candlestick formation is on the daily. What will now happen here is this. Since I'm anticipating price to take out this previous day high point, day high, price has taken it out. See what now happens when there was a day sweep. Sorry. We can see from here, we can now see from here that from this particular play, we can now see another daily demand zone. So what I'm saying is the first one is still active. This first trade is still active. You can see it. This first trade is still active because price has not come out and take out that low. But the second trade is no longer active because the low point has been taken out. But when that low point has been taken out, our criteria that this daily high have to be taken out is not taken out. Then we'll now have a demand zone there. What can we do? we tag along on that demand zone. We enter another trade and then put our trade there. So therefore, let's now see what happened. You can now see, you can see. Okay. Very beautiful trade. So therefore, we have the first one as 5.23 risk to reward. Second one was about 13 risk to reward, but it failed. And this other one is about 6.9 risk to reward. So in total, now we have 5 plus 6 reward, or let's just say 7 reward. Then if you minus 1 from this is 5 plus 6, that's 11, right? With minus 1 that we just lost, that will give us, 10 risk to reward that we have just gotten on this particular trade. Okay, that is our kind of formation on from the monthly to the daily and all of that. Now let's look at the second example on this. And now we can see that from this particular trade, we have entered this trade and then it has come out to this monthly high point. Now that this monthly high point has been taken, what do we expect? We want that we have the same reversal pattern on the monthly, meaning that that's our monthly high point. Then this will now be our monthly what? Our monthly low point. Our month low. So therefore, we'll move from the month and then we'll go to the weekly. On the weekly, what are we expecting? We're expecting a kind of candlestick formation also, just like that. Everything is all about repetition, repetition, repetition. So let's play the chart. Now, on the weekly, our candlestick formation has now formed. So therefore, if we are going to be entering trade on the weekly, this will be a very nice trade to enter. Looking for 1 to 3, or since this is a weekly chart, usually, apart from trading stock, I don't usually enter my trade on the weekly. For forex, crypto, and all of those, I usually trade on the daily. Even if I see a signal on the weekly, I will have to go to the daily and go and trade it, what the weekly will tell me. So this particular signal on the weekly, it's not giving a very good risk to reward. It's just 1.5. So let's see how it plays out. Okay, we see this is a fade trade. The trade fade. So when the trade fade, what do we expect? So therefore, we are still on the weekly. We are still expecting price to reverse. So this will now be our weekly high. Then this will be our week what? Our week low, previous week low. So therefore, since we have this type of formation, we then go to our daily time frame and see if we meet our reversal on the daily. So we are still looking for our reversal on the daily. Let's see if we'll see something like that. Usually in this place, we are looking for our reversal, but we did not see our type of candlestick formation. So majority of the time, when you don't see your candlestick formation on the leg, then we cannot look for a kind of setting where it will be a continuation type of trading where you see this low will be taken out. This is going to be a confirmed supply zone. Then we cannot enter the trade in this second supply zone and trade downward. So let's see if that is what is going to be playing out here. That's number 2, the number 2 strategy. Our strategy number 2, continuation or confirmation. Although when we have this supply zone over here, we are not going to be using this one. We are not going to enter trade here because this trade is not yet confirmed if the trade is going to go up and come down, or if the trade is going to continue going up. That's on the daily time frame. So let's see. What we are anticipating is for price to come into this demand zone, take out this low point, then come back to this if there's a valid supply zone there, and then continue to sell. So let's see what plays out. Now you see, okay, you see what is now playing here. We have our low points here. Remember, we want price to come back to this low. At the same time, price has now tapped into this supply zone and giving us our reversal candlestick pattern. Then usually what we'll do is now to enter this trade. This is the trade number one until it comes to take out this low point, if it is possible. Okay, trade number one, let's take it. Usually I will go from 1 to 3, but we can take it to this low point. Okay, to this previous week low. So let's see what price will do. Okay, you see what is also happening over here. This is kind of an advanced supply zone, an advanced supply zone, and the video is already on my channel also. You can study it. So usually if I see this type of candlestick formation also, what I will do is this. I will take it. Why? Because this low point we want price to take out has already been taken out. You can see this low point. This low point has been taken out. And when that low point is taken out, what am I expecting? I'm expecting price to reverse. And that is what has happened. Low point taken out, price reverse into this advanced supply zone. And then I will not enter this trade in this place. But where I will enter this trade now is on this, our confirmed supply zone. Kind of confirmed day supply zone, because this is a valid candlestick formation we are looking for, and we have gotten it, and this is going to be a continuing trade. So let's see what plays out. You see, this was a very beautiful trade. So what do we have here? We have 5.79 and 3.67. Okay, that's about 9 risk to reward on this trade. And this is very simple if you just follow the formula. Looking from the monthly to the daily, and then from the daily to from the monthly to the weekly, and then from the to the daily. So that is all we have for today concerning case number 3 as we study crypto ADAUSD. So have a great time. Bye.